Welcome to Tech News Briefing for Tuesday, May 9th. I'm Zoe Thomas for the Wall Street Journal. Investing in Silicon Valley startups has slowed this year amid widespread uncertainty about the economy. But one sector is bucking that trend: artificial intelligence startups. Venture capitalists have been pouring money into AI companies regardless of their plans or lack of plans for ever turning a profit or even getting a product to customers. With me to talk about this is our startups reporter, Berber Jin. Berber, can you start by telling us about one of the companies that's been attracting investment despite maybe not having a fleshed out business plan?
Yes. So there's a company called Essential AI. It was founded by two former Google AI researchers. These two founders were at another startup up until the end of last year and told investors they were thinking of creating a new company. Before that company even had a name or a business plan or a way to generate revenue, essentially venture capitalists were hounding these two founders, trying to lodge an early investment in their company. And they've since raised a few $1 million from VC firms, including Thrive Capital, which is run by Josh Kushner. According to people familiar with their plans, they're still sketching out a definitive business strategy. But our understanding is that the product they sort of settled on is creating a service that can help startups use multiple different AI models more easily than just using one model, for example. But when they were raising money, investors essentially weren't completely sure what they were going to do. And I think that just sort of shows the interest and the frenzy in Silicon Valley to basically just get a piece of what people think will be the next sort of big tech revolution.
So that's one company, but overall, how much money is predicted to go into the AI space this year?
So this research firm PitchBook, which tracks data for the whole industry, they predict that investment in generative AI companies alone, so the companies that are using and building models that can generate intelligent text and word responses, that it'll be several times last year's level of $4.5 billion. And if you talk to venture capitalists, they're quite in line with that estimate and are predicting basically a huge surge in new investment into these companies despite the current downturn.
What's driving that?
It started with the release of ChatGPT last fall. It really opened the potential that VCs saw in generative AI as an investment category more generally. I think VCs started realizing that there could be specific generative AI models that could be used in healthcare, in social media applications, in even fintech and financial payment services applications. And they also realized that there could be also competitors to OpenAI who are building their own language models and are racing to win that part of the market as well.
I mean, if there's so much demand to invest in these companies, what's the competition like then amongst investors to get in and find the right company?
I think you sort of see a return to a bull market mentality where VCs are doing anything and everything to try and get in front of founders and show that they're really excited by AI. There's one venture firm we reported on called NFX. They re-outfitted their office in Hayes Valley, which is where a lot of the AI activity is happening right now. They created a red-walled speakeasy and they turned their garage into an event space. Those are the types of things that VCs do when they're trying to get in front of founders and show that they're the right people to partner with. Even in the investment terms, you're seeing valuations that are sort of like 2021 valuations, like really high prices that VCs are paying for companies that don't have a set business plan. You see rounds coming together in a matter of weeks, due diligence not being as thorough as you would normally expect. So it is kind of a return to the bull market mentality that a lot of VCs actually have warned about.
Is there any concern then that they are rushing into some of these deals that could maybe just turn out to be hype?
I think one thing that's important to note is that there hasn't actually been a clear path to success that any of these startups have proven. So I think there are a lot of question marks around who is going to capture a lot of the value around this technology. And that's the big risk that these VCs are taking by paying these high prices to get into these very young and unproven companies.
All right, that was our startups reporter, Berber Jin. Thanks for joining us, Berber. And that's it for today's Tech News Briefing. For more tech stories, head over to our website, WSJ.com. I'm Zoe Thomas for the Wall Street Journal. Thanks for listening.